Hi, everyone. Welcome to the ins and outs of selling a business. For you, those of you just joining us, my name is Keith D. I'm president of Osage Advisors. Osage Advisors is a boutique merger and acquisition firm working with owners of family-owned businesses looking to sell. Typically, we're with companies with $5 million in revenues and up. Today, we're going to continue our conversation with one of our valued Osage team members, Jim Young. Jim, last episode, we kind of looked at things from your experience from a buyer perspective. Well, you've been with Osage now just about 2 years, and I'd love to learn from you or hear from you some of the techniques and your experiences you've been able to translate from a buy side now that you're working on the sell side. Maybe you can kind of give us a few examples and how things are going.
Keith, it's great to be back. Thanks for having me. Looking forward to this podcast as well. Old pro now.
That's right. You're a natural.
Yeah, right. We'll see. So last time we talked about my perspective as being a buyer, and now the transition to being a seller of businesses. And so I've really enjoyed working with you for the last 2 years. It's been just a wonderful experience, and I think we make a great team. So I'm really glad to be part of the Osage Advisors family.
Well, we're happy to have you, and for those of you just tuning in today, that Jim has worked on with us 3 deals that successfully closed, which he did a tremendous job on. We have one getting ready to go to market, and we have one that's kind of going to be in market probably after Labor Day. So we are very happy to have you, and you're doing a terrific job. Our clients love you, and again, love to hear a little bit more about how you've been able to take your toolkit from the buy side, and now you're working on the sell side.
Sure. Let me share a little of that with you. So, 30 plus year career, mostly on the buy side, now transitioning to represent clients on the sell side. So I had viewed myself as a professional buyer of businesses. And I think it's a very important perspective to see the world from the other side of the table. It's the same transaction. But to appreciate trying to sell a business versus to buy a business, it's nice to know both sides. And I think we take advantage of that, understanding what's important to both sides for our clients.
Well, that's great. So, what are some of the key factors, or adjustments you've had to make, from your 20 plus years, maybe 30 plus years now experience on the buy side, that you've been able to kind of port over to the sell side, or what kind of things you've had to kind of like tweak, so to speak, now that you're behind the curtain, so to speak, working with the seller.
Yeah, no, it's a very different perspective. I was an employee of major corporations. Right now, we're in business for ourselves, and we're representing clients in their best interests. So it's a different perspective. Rather than reporting to a boss or a manager in the major corporation, we're reporting to our clients who've never been through this before. And so it's a different way of interacting for sure. And, we're trying to explain a fairly highly complex opportunity and transaction to our clients who haven't been through it before. And so whereas in the corporate world, we've been through it dozens of times. So everybody's old pros. They know what to expect. Our clients don't. They know how to make their product, their service. This is very much hand-holding and making sure they feel comfortable every step of the way.
Well, I think you bring up a key point about Osage and any sell-side advisor, that it's all about establishing that relationship, establishing that trust factor, being available 24/7. As you and I've talked about, and you participate in these calls, at 7:35 on a Thursday night when your client the next day is supposed to close the deal, and your client's calling up with a question that you're like, wait, what? Right? I mean, it's like, but you got to return the call. You got to kind of talk them off the ledge, get them comfortable, make sure they're happy. And if they're not happy, you have to go back to the buyer. I don't care if it's the beginning of the deal or the night before closing. You need to get the answers so your client is happy and comfortable to move forward and close, right? So I couldn't agree with you more. I think these kind of surprises. I wouldn't call them surprises. Natural things that happen in an emotional transaction, right? All about the relationship. It's key factor. So when you're on the sell side versus the buy side, right? It's really understand. This is their life, right? It's their family, it's their kids, and it's their business, and probably in that order, right? So you meet. And it's just as so you have to make sure that they're comfortable when they're ready to close. So, can you give us a couple examples of things that you learned over the last couple of years on a sell side perspective that you may not didn't take into account or didn't focus on as much when you were looking to acquire business from the buy side?
Yeah, first, I was smiling when you were talking there for a moment. When I was thinking about making the transition from corporate development to investment banker, a friend of mine, actually a competitor of ours, said it's a young man's game and that I was too old for this because the hours are crazy.
You're a young guy.
Yeah. Young Jim Young. But it's been fine. And we are on call 24/7. But I was on call 24/7 in corporate development. So that's the lifestyle there. There's peaks and valleys with transactions. And sometimes you have to work a weekend or night, and sometimes you get to play golf during the week. So it's not too bad.
I was telling somebody the other day, right? I mean, it's like I took like 4 days off to go play my brother's member guest, and it was the first time in 20 years. I mean, this is our 21st year that there was actually I didn't have like a deal in some stage of process that I had to be like on call 24/7. I had my phone with me, of course, if I needed it, but it was like 4 days in over 20 years where I didn't have to be on high alert, so to speak,
Sure.
Versus if it happened, we just closed a deal earlier in the month in April. If it happened 2 weeks earlier, I would have been on my phone the whole time, right? So as you say, just being available to your clients 24/7 is critical.
If that happens again, I'll take your place. I guess.
I may take you up on that.
Yeah. So, one of the surprises to me, as a corporate buyer, I was looking to acquire 100% of the business, right? A major corporation does deals with all sizes of businesses, including family-owned businesses, which we mostly transact with. So it's in scope, but we want 100%. In the private equity world, which we refer to as strategic buyers, they are perhaps more interested in having the owner keep skin in the game. And we call that, as you know, rollover equity. Right. So that while they might acquire 100%, but right at close, they also sell back up to 10%. So the owner actually continues to have an equity stake. That's quite different and something that I wasn't accustomed to in my prior transactions.
Okay. So, it's interesting because on, let's say, I would say 4 of our last 5 transactions, the owner actually ended up rolling equity into the deal but they rolled it because they wanted to, right? So you don't know what you don't know. So when you've had these conversations, you set these meetings on the Zoom with me and in front of clients, and it's about, I want to sell, I want to go, I'll stay on for a couple of years and I'm done, or 6 months I'm done. But as you said, you don't know what you don't know. First time transaction, only time transaction, is that when you learn a little bit more from the buyer, what value they bring to it, the kind of light bulb goes off and said, you mean I can focus on the fun stuff and not so much on human resources or dealing with the insurance or dealing with the more important issues, but more, the owner would say mundane issues, right? Things that have to be taken care of, compliance issues, but I can focus on strategy and growth, things like that. You can get excited about it. And so to your point, it's like the emotional roller coaster going through a transaction, and the seller's perspective changes as they learn more and more about what happens.
No, that's right. I mean, this rollover equity can be a very good thing. It allows flexibility to the seller. So they may be very adamant. I'm out. I'm 100% done. I want to retire. I want to play golf, whatever it may be, whatever their passion is. I am stepping away. Only to say, wait a minute, this is actually a good investment. I know my business. I know the future potential here. And maybe I do want skin in the game. And, another perspective is let's say there's an individual owner who's not ready to retire, but now is a good, it's a hot market. The valuations are very high. Now's a good time to maybe take 90% of your chips off the table, right? While retaining some ownership stake, retaining your position, and continuing to run the business. You've locked in a very high purchase price, sale price from their perspective, and while continuing to maybe work a few more years before you truly retire.
Right. We call that second bite of the apple. And sometimes the second bite of the apple could be more valuable in the long run if you execute than the first bite of the apple. So, it's about keeping an open mind, understanding the market, becoming a well-informed, educated seller, and then you can make that value decision. So, okay, so you've worked on 3 successful closings in a very short timeline with us. There's of course lots that go into that to get to that point in a transaction at the end at closing where the client sits down, he or she says, "You know what? I'm happy. My goals and objectives have been met, and I'm ready to sign." They sign, they close, move on, right? So give us like 3 or 4 things or a couple things that that are that you've come across that are important, that from a seller's perspective, in your couple years with Osage.
Yeah, I'm going to go to the prior to the transaction. So here's a business contemplating a sale, and what do they need to do to prep themselves for that end goal of that close, and hopefully being enriched through this transaction, right? How can they plan ahead? And the more time they allow to think through a buyer's perspective versus how that they have been running their business for years. Those are 2 very different things. And perhaps they need an advisor like us, an investment banker, to come in and say, "Hey, here's what we see out there, and here's how it differs from your business, and here's the steps that you can take to set yourself up for success for when you're ready to sell." So that those prior thoughts.
So these are like 3 or 4 of the most important things a seller needs to be ready for.
Exactly.
Yeah.
And one of them I'll start with is valuation expectation, right? And so, it's one thing if you own 100% of your own business, but often it's a family affair. And you might have an uncle or an aunt or even an outside investor involved in the ownership level, but not on the day-to-day operations of the business. So they truly don't know the value of the business. One of the things we do is we put together a valuation model, and we take their financial statements and digest it and look it over a period of time. And from an independent perspective, we can see what, in today's terms, what the business is worth. And that could be very different than what these individual owners view. And it's market-driven, it's financial statement-driven, and it gives them a different perspective to really set expectations of here's what we can expect. And sometimes their number is much, much lower, and oftentimes the number is much, much higher. But we're grounding them in reality of what they can expect.
Yeah, so just before you go on from that, I mean, we've had several conversations with prospective sellers about valuation. And I think you and I spend a lot of time, or Osage as a team spends a lot of time, just making sure, not just looking at the valuation itself, but looking at the market, looking at different trends, looking at all these things. Okay, we think it's going to trade between X and Y, and we get on the phone, and we have that conversation. And it's always interesting to see how they react to it. I think more times than not, they listen, and they're seeking our advice. And we're trying to be open and honest about it. Obviously, we want to exceed their expectations in any transaction, but that's key. So what other things would you say that they need to really be prepared for?
Yeah, so this is prior to the transaction again.
Right.
It's really get your financial statements in order. And many business owners operate their business, they know their product very well. They know their customer very well. They're not necessarily especially strong when it comes to financial statements, financial systems, accountants, CPAs, CFOs. They might lack all of those. And they might also run their business how they're comfortable running their business, not necessarily from a professional viewpoint that a buyer would expect. And so it's really getting your financial house in order. Oftentimes a business owner will run their business to reduce taxes, personal taxes, business taxes. And that's fine, but that means you're lowering your profitability, right? The less you make, the less taxes you have to pay. Right? So they're loading up in certain expenses in order to have a low return. Well, acquirers want a very profitable business. It's counterintuitive. It's actually the opposite, right? So it's very different. When I look at a business and I see a single-digit return, that's not exciting to a buyer, right? But an individual owner might be quite content on that single-digit return. It's kind of like saying, "Hey, my investments made 3 or 4% this year." So what? It's not great,
right? So they're running it to minimize taxes, but then we have what we call the Adbacks, right? So getting into that aspect of, if I normalize my earnings, if I was running like a public company, which any company that we sell or anybody sells, middle market, lower middle market, has these Adbacks, and we normalize earnings, and all of a sudden the adjusted profits come up, right? So getting a sense of those Adbacks, drilling down to those Adbacks, confirmatory due diligence on those Adbacks from our perspective. How have you felt about that in those conversations?
Yeah, for sure. Sellers don't appreciate that at all. What are we talking about? What's an Adback? What's EBITDA? Right? Every buyer talks about EBITDA, earnings before interest, depreciation, and amortization. It's not something that a seller, an owner of a business, runs his business towards, but it's exactly what a buyer is looking for. So now they have to create a metric they've never used before. And then we have to adjust that metric. We're talking now not EBITDA, but adjusted EBITDA. And then we're talking about the Adbacks. And what is an Adback? How do you normalize the business? So there might be certain expenses that they're incurring today. So maybe they're paying themselves an inflated above market salary. So let's say, for example, the market rate for this level of general manager or CEO is $250,000, but they're paying themselves $500,000. You could say an additional $250,000 above market. If that position is to remain in the business, there's an add back of $250,000 excess expense that's added to profitability. That's the normalization that we're talking about. That's the adjusted EBITDA. And that improves earnings that they would not normally have seen as under their ownership. That would be quite different under someone else's ownership.
Yeah. So you're seeing right now, right, from a seller perspective, that you have to kind of prompt our clients. Let's talk about these Adbacks. And not just you, me, our team. We're always like, okay, making sure that we're getting everything captured. Obviously, it's definable. So you come up with adjusted EBITDA, right? Valuation expectations are in place. Any maybe one more example, something that from a seller perspective that you really have kind of more focus on now than you would from a buyer.
Yeah, one of the things we discovered is small business owners tend to understate their inventory. They do that for tax purposes. In other words, to minimize their taxes. But that makes the financial statements unreliable, right? Inventory is an asset. It also affects working capital. And so the way to clarify that is they need to conduct a physical inventory.
Right.
Ideally prior to putting the business for sale. So that they have a solid, reliable balance sheet. So that's something we often come across. But that also means, hey, your taxes are going to go up because it flows through earnings. That's the impact that they're uncomfortable with. But that's how one step in preparing the business for sale.
Right, and I think the thing that the focus on is that don't do it when you're ready to sell, right? You need to back it up, and when you're thinking about selling, right? Maybe it could be 2 years, 3 years, whatever. Start thinking about it as a profitable business, as an entity where my inventory is fairly stated. I get monthly financials, because once we get into a transaction, if that information is not available, or we have to create it, or help them, get someone to create it, it drags out time, and time is never your friend. So we've talked about this on many, many occasions in prior episodes about the importance of reliable financials, whether they're annual, whether they're quarterly, whether they're monthly, whether it's a trailing 12 months, having access to availability. And if you don't have the team in place to do it, then you may need to hire somebody to do it, or bring somebody on a part-time basis to do it. But I think, and I can say this because it's been over 2 years that, some of the companies that we worked with, we had to take a very hands-on active role in making sure that information flows on a consistent, timely basis. Otherwise, it could affect the deal. So, I think, to your perspective, we'll continue to see clients like that. And our job is to be totally transparent. We don't want any surprises, right? So we talk about it. You talk openly about it with clients now. You're getting, it's an important factor that you never really thought about as much as a buyer. So that all being said,
Keith, let me give you one more.
Yeah.
Right. We said three items to prep a client prior to sale. We talked about valuation expectations. We talked about financial statement preparation, and really the third one in my mind is getting the documentation in order.
Right.
Right. And so they take for granted perhaps how they run a business, and how it's viewed very differently from a buyer perspective. For example, the subject of environmental. If a business at all has any environmental hazardous materials that are used in the production of their equipment, that will be a major focus during due diligence by a buyer. And so if they got their documentation in order prior to sale, where they made sure they had all the permits that were needed, that their procedures in the operations of the manufacturing facility are in line, that will greatly help during the process, because even while they might think everything is fine, there's no issue, a buyer doesn't know, and they're going to take a deep dive. They're going to hire expensive attorneys, and they're going to spend considerable time digging in, even if they find nothing. So in order to reduce time, reduce the distraction from running their business, and certainly reducing expense, get documentation in order prior to a sale.
Well, that's a very good point. I mean, we have these ongoing conversations, and our clients look at this. Well, I don't want to spend the money, right? It's not you're spending; you're investing the money. We talk about that before. In prior episodes, is that you're investing in your business, and for every dollar you invest in, that produces $1 of profit, that's going to be a 4, 5, 6, 7 times that, 8, maybe even 10 times that dollar return into your pocket. You don't get those kind of returns. It's just so that invested dollar is going to reap tremendous rewards for you. So we worked on several transactions, 3 closed. We've got a couple in the market. We got a few in the pipeline. Surprises, right? I mean, things that working at auction process, things that we do, and how we go about the market for our clients, which we are adamant about. Testing the market, a broad-based approach. What are some of the things that you like? Wow.
Yeah, sure. I'd love to share that with you.
That'd be great.
Yeah, I've been at this for a long time. But it's been a long time since I've been selling businesses, right? Doing those divestitures of corporate carve-outs for the big companies I worked for. And, back in the day when we conducted an auction, we would approach a half dozen to a dozen potential buyers, because it was a lot of work. Imagine trying to negotiate terms with, a dozen separate parties. What Osage brings to the table is a full auction process. Using a database and technology that wasn't available to me back, 20, 30 years ago. And we have a process that's dynamic. We can go to the marketplace for 2,000, perhaps even 3,000 potential buyers at once. Now, how do you manage that if you couldn't manage a half a dozen? Well, since it's all automated, right? You press a button and out goes the door, a one-page, non-confidential description of the opportunity along with an NDA to 2,000 or 3,000 potential buyers. Those that are interested sign that NDA, and then they get the full description of our client's business through a SIM, a confidential information memorandum. That's automated. It goes out through our system. It's beautiful. That generates a controlled timeline and controlled timing of when individual bids are received all at the same time. That's magic. And that allows us to maximize the purchase price to our clients. That was a big surprise of the demand that was created through the Osage system.
Well, thank you. We've spent over 20 years refining our process, and we continue to refine it and upgrade it. We always look for input from our clients as well as people within our team, the ways to improve on that. But at the end of the day, it's giving our clients choices. So what other things have kind of like surprised you, so to speak?
Yeah, the other amazing thing is when those bids came back, right? We had a transaction last year that we received 27 initial bids in the form of an indication of interest.
Right.
And often buyers will put them in a form of a range. not an absolute price, but they'll pay from this number to a higher number, a range.
This is before we have management meetings and LOI stage. So just initial,
Exactly.
based on talking to us, looking at our SIM, our Q&A doc, and they say, give us an idea what you think
First
it's
round
worth.
bid.
Right.
First round bid. You rank those 27 bids from high to low. And it's amazing that the lowest one was 2.5 times, I should say, the highest bid was 2.5 times higher than the lowest bid. Now,
Right.
these buyers all received the same information, all the same financials. And these are sophisticated buyers. These are people who are in the business of buying businesses. And yet the difference in opinion of valuations is incredible. And what's the key takeaway here is without an auction process, if a business owner went to market by themselves and was approached by one buyer,
At the low end of the bids, right?
which bid did they receive?
Exactly.
Number 1 and number 27.
That's right.
Right? The average bid in the case that I'm talking about was $36 million lower than the highest. The average, not the lowest bid,
Right.
the average. So if they're getting an average bid, they're leaving tens of millions of dollars potentially on the table
Right.
without the use of a financial advisor like ourselves.
Right. So it's interesting because if don't we always say don't pick up the phone, right? Test the market, you owe it to yourself. But in this situation, buyers, right? All these buyers, they said, what's the client? What are they looking for? And our answer is value is different for different buyers. So put your own value on it. So you got 27 bids, and we're talking about highly sophisticated buyers in this case with this particular company and every deal we work on. And these are reputable firms that have been a long track record, but they perceive value in different ways. So like we said, value is different for different buyers, but your value's here, real value's here.
And while wasn't a surprise to me, maybe it was a surprise to our clients, we take it to the next level. We make it very personal. So while we're ranking these numbers of high to low, we try to bring it to what's the best fit. And here's your baby. Who do you want to give it to?
Right.
Right. And it may not be that high bidder. It may be number 2 or number 3 for whatever reasons that is. And the client needs help getting there. And through the management presentation and other discussions that we have with buyers before we sign exclusivity at the letter of intent stage, we try to make sure that we've captured the reasons beyond purchase price that makes the most sense for our clients.
Right. And so, right, 2 or 3 deals we worked on recently in the last year that you worked on, our client didn't take the highest price. Didn't feel it was the right fit, right?
Exactly.
So, and that's the kind of thing we continue to work on, is that it's got to feel right. It's got to be, obviously price is important, but it's just not price. It's the fit, it's the culture, the legacy of the firm, your employees, all those things factor in that decision. And when you have 2 out of 3 deals you worked on that closed, and out of the 2 of those deals, they didn't take the highest price because they just didn't see it, or they saw the second bidder as more strategic and value orientated through this whole value proposition. So, well, look, Jim, this has been great. We enjoy having you as part of the Osage team. You're doing a great job. Hope you're with us another 10, 20 years working this. We have a lot of things on the table working together right now, and it's really exciting. And then thanks for being with us today. And I'll probably see you in a few minutes. But in the meantime, thank you, everybody. My name is Keith D., President of Osage Advisors. You can reach us at osageadvisors.com or give me a call directly at 860-767-3273, extension 1001, or shoot me an email at kdee@osageadvisors.com. Thanks for being here today, and have a great day.